Hey, good morning, everyone. It is Tuesday, August 15th. Welcome, welcome. We're back in Toronto here and trying to readjust. We'll be back for about a month and a bit. And let's get started, right? We had an interesting start to the week yesterday where markets held pretty well. We held that 70 area on the S&P. We'll talk about a trade plan as well by the end of this, but we held extremely well for a bid, right? We had a decent bid into the end of the day. Even into the end of the morning session, it was pretty good. But right now, we find ourselves right back as to where we started. So, what does this mean? What are the expectations for this week? What can we do with this week? Let's take a look at that. But first, let's talk about some of the news. One of the main things that did come out over this last week was that the SEC filings, or I should say, I guess, let's see where this is. Bum, 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 bum. Yeah, the securities filings for Michael Burry came out, right? That took out a massive, massive bet on a market crash in the last quarter. So he did buy put options on the S&P 100 and the Nasdaq 100, valued at $1.6 billion at the end of June. So that period, I should say. So Michael Burry's Scion Asset Management held puts with a total contract value of $886 million against the S&P ETF shares and another 739 million against the triple Q ETF shares. So again, um, he has these derivatives contracts that are being held at the end of the April-June quarter against 2 million shares in each of the ETFs. So they're against the shares. According to the Twitter account, the verified Twitter account called Michael Burry Stock Tracker. Note that the combined $1.6 billion was a total contract value of shares against which the put options were bought. So the cost of buying the puts is likely a massive, or it's likely a tiny fraction of the total value of market value. So there's no real other details. We don't have strike, we don't have expiration, we don't have premium paid, or the current holding status. So we do have the understanding that the total contract value of 1.6 billion represents about 93% of Michael Burry's reported portfolio. So put option holders usually gain price when obviously the market falls. And as of June 30th, 2023, the SPY was trading at $443, whereas the triple Q was trading at 369. The SPY has gained under 1% since then, while the triple Q has been flat. So Michael Burry, very, very famous and popular for taking that massive short bet on the impending mortgage crash, making his fortune in 2008. But ever since then, he's been opening a lot of puts. He's been opening a lot of weird positions, but nothing has really materialized. I remember it wasn't too far, I think in January of this year, he tweeted sell. Right, we've been up like 60% since then in like we've been up like 60% since then in select big tech names, right? The S&P is up like 20 something percent, I think. But in other news, we still have earnings that are coming out, right? We're at a point in the market where we have some kind of fragility as the market is pulling back right now, where a lot of people are looking at this and thinking, wow, this is the next massive pullback for us to dip by. But we do have to take into consideration what's going on with earnings. We saw Nvidia yesterday ramp up like crazy. Nvidia's earnings are coming out later this month. But we also have retail, right? The retail space, big box retailers like Home Depot are set to report Q2 earnings today. Target and TJX are going to publish results tomorrow, followed by Walmart on Thursday. So the macro figures may be just as important as individual earnings, with the U.S. Commerce Department releasing retail data sales this morning. They already released expected 0.4% month over month, with June lower than expected gain of 0.2%. Remember last time around with retail and these big box companies, a lot of theft, right? A lot of money was lost in theft, so a lot of gap downs in these names. I think I don't think there was much forward guidance last time that was given, but I think that there is a really good potential for, even if they did gap down, I think these are very good additions for the long term. I'll be watching this very carefully. So spending patterns on goods will be eyed closely, especially for items like apparel, food, furnishings, and electronics. Earnings reports will also give a closer read on consumer behavior and their response to the current price environment. If costs rise by a smaller amount or even dip, that can impact spending patterns, especially in an era of low employment, or low unemployment, I should say. More spending can also influence margin estimates and inventories, which could show up in retailer guidance. The figures also should additionally provide a better assessment of the U.S. economy, which appears to be on stable footing. And gross domestic product grew at an annualized rate of 2.4% in Q2, helped by strong consumer spending, while the Fed subsequently canceled a prediction for a U.S. recession, which will give resilience to the economy, and it should uh, take some time for Wall Street to get that memo, it seems. So even JP Morgan bailed on a mild contraction that was set to come early next quarter. In terms of some of the other news, um, we got AI conversation in response to this week's Wall Street bet survey are coming in fast with already 3,000 respondents participating in the poll. And you can take the survey and see the results based on AI about the legal discussion around and also some of the copyright around AI, creative properties and rights to the content. So it's still in the very early stages. That's why I was mentioning, I feel like a while ago, that AI components of AI and also stocks that have components of AI are probably going to be pretty strong investments for the medium term here, until some of the regulatory stuff does come out. We also have some F-13 filings, right? It's F-13 filing season, giving investors a chance to see what hedge funds with at least $100 million in assets under management bought and sold during Q2. Warren Buffett's Berkshire Hathaway added new holdings in home builders like D.R. Horton, DHI, NVR, Lennar, LEN, and sending stocks higher in the pre-market trading while reducing its divesting stakes in Activision Blizzard, ATVI, Chevron, CVX, and McKesson, which is MCK. Michael Burry's Scion Asset Management also ditched positions in bank stocks and Alibaba, while investors also eyed reports from David Tepper's Appaloosa and Elliott Management. So there's also a lot. We'll see what those disclosed filings look like as the week progresses. And in terms of other news, there's not really too much realistically. We have some minimal news that comes out. Kashkari is speaking today, a Fed speaker at 11 a.m. And in other news, we just have the market, right? Market sold off the S&P 500 into the end of the day yesterday. We rallied up to 45, like 15, 16 or so before we got a larger dump that happened on the overnight session, bringing us back to yesterday's open at 44.70. So significant 40, 45 points up, 40, 45 points down, back to where we stand. And it's a very important area at 44.70. I'm just going to keep buying that area until I get stopped out realistically. I'm still long, newly long, but 44.80, 82 has a lot of volume shaping up there, which is a major resistance. If we can leap above that, I think they still have a chance for the upside where we can target 44.96, 98, and then we'll see where it goes. Anything under 44.70, realistically, we're probably going to get some larger pullbacks that you have to be very cautious about buying. This could be the final dip before strong-handed buyers really just take this and start running it back up over the next 2 to 3 weeks is my anticipation. So with that being said, with the S&P 100 futures, the breakdown of that, we'll be jumping in our live trading room, and we will see you guys there. Check out TradeProAcademy.com. We do have a free futures course that's available to everyone on the website on the homepage, and I hope to see you all in our trading room. Yesterday, we had just trades off the 70, really. I barely talked. I said I'm just buying 70 and holding. So we'll see what we have, and I hope to see you all tomorrow and the remainder of the week, and chat soon.